When we're talking about investments, a very common comparison is real estate versus stocks. And people always make the argument, well, if you would have just put the money in the S&P. So when they're trying to talk about something, we want to compare everything apples to apples. Now, real estate and stocks are both investments and they both should be part of your portfolio, but they're very different investments. Today, I'm going to talk about why real estate has big advantages over stocks, and that doesn't mean that you should only invest in one or the other. Obviously, I invest in a lot of real estate. I'm a realtor and real estate investor. I know that area well, and I very much enjoy all the benefits that I get from investing in real estate and all of the ways that I can control those investments. So again, a lot of times people like to compare the stock market to real estate. They say, well, the S&P goes up on average 8 or 10% a year. Real estate doesn't necessarily appreciate the same way. And it's right. Real estate appreciation is all over the place. You might have some years, like in the past few years before 2022 in Austin, where things went up 10, 15, 20% a year. That's crazy. And it's amazing. And it's great to be able to have that where you buy a house and all you have to do is hold on to that property, house, duplex, whatever, and the value just goes up. You've done nothing. That's amazing. On the same hand, with the stock market, you might have some years where it goes up 8, 10, 15, even 20%. Same as real estate when you're in a crazy market. Stock market has times like that too. So the past few years where real estate hasn't done as well, stocks have done very well. So they've gone up 10, 15, 20% a year. That's amazing. You don't have to do anything. You just invest in, let's say, an S&P 500 ETF and your money grows. Now, one of the reasons I really like real estate compared to stocks, so just personally, the majority of my net worth is tied up in real estate. I do own some stocks. They're mostly ETFs. S&P 500 ETF is the most of what I have. I've got a few other stocks too, but I don't know that area super well. I know I'm almost never going to beat the market, so I just choose to invest in an S&P 500 ETF. So that would be similar to me just going out and buying a piece of real estate and doing nothing to it. So if I go out and buy a piece of real estate and do nothing to it, I'm just relying on natural appreciation for the property to increase. I'm not looking at anything else. I'm just saying with natural appreciation, this versus this. So real estate versus stocks. Maybe stocks are better investments in that sense. So if we're just looking at appreciation, you don't do anything, you hold on to them. You might get better appreciation with stocks. I'm going to acknowledge that right off the bat before we get too far into this. But something you can do with real estate that you absolutely can't do with stocks is you can force appreciation. So you could buy a property for, let's say, $200,000. Maybe you put $50,000 into it on a rehab and you force that property up to $350,000 of value. So that forced appreciation is much greater than the natural appreciation you'll ever get, and you can get it much faster, and you can control forced appreciation. So you can say, okay, I'm going to buy this $200,000 property. How much money does it need to be fixed up? What is it worth after I fixed it up? You don't get that luxury with stocks. So forced appreciation is a way you can add a tremendous amount of value with real estate. Not to mention, there are some other benefits from real estate. Obviously, you get depreciation, which helps you save money on taxes, and you get loan pay down, which over time you pay off the property with money that ideally is not yours. So the tenants are paying off your property. But let's go back to this forced appreciation. This forced appreciation or value add investing is one of the best ways to invest in real estate. And it's how a lot of the real estate guys that I know make a ton of money. So you're looking for an undervalued property that's generally undervalued because it's not doing so well. Doesn't look very well. Maybe it needs some cosmetic upgrades. Maybe it needs some bigger upgrades like roof, windows, sidings, mechanicals. And when you do that stuff, when you buy a property that's not doing so hot and you make it much nicer, it's worth considerably more money. So in the end, again, you want to check this before you do it, but in the end, the property can be worth significantly more money. And that doesn't just make the property worth more money. So yes, the value of the property goes up when you improve it. And for this conversation, we're generally talking about residential real estate, but this does apply to commercial real estate a little bit too. You make a property look nicer, almost always it's worth more. How much more? That depends. When you want to do research, you want to run comps and understand your projected value or your after repair value when you do these repairs to make sure the repairs are really worth it. So you got to get the right deal on the property when you buy You have to be able to control your budget when you're repairing it, but then you can make a big margin there. So why I love this so much is because you can do this. And then because you have that inflated value in the property, you can either sell the property or you can refinance it. And it doesn't mean you have to sell this property. So you might say, I'm going to buy a property for 200,000. I'm going to put 50 into it. And then you refinance that property and get all or almost all of your initial money out. Now, this is the BRRRR strategy. So you're buying it, you're rehabbing it, you're renting it, then you're refinancing it, and you're going to go out and do that again. So I just bought a $200,000 property, put $50,000 into it, and I got all my money back out, or maybe I left a couple grand in. That's awesome because now I own that $350,000 property and I'm going to continue to get that natural appreciation. And assuming you bought it right, you're going to get that cash flow over time. You're going to get those tax benefits and you can be paying down that loan. So those are things you absolutely just can't do with stocks. So when you're talking about real estate versus stocks and trying to compare them apple to apples, understand they're not the same. Also, understand if you're not going to do anything, one may do better than the other. So you have to look at it. You have to look at your investment strategy and say, hey, what do I want to do? What am I able to do? What sort of risks and work am I willing to take on? And that's why I think with real estate, generally you can make a lot more money in a shorter period of time using leverage, of course. And you can force that appreciation or you can control the value of your real estate. With stocks, again, I don't have anything against stocks. I own some myself. But with stocks, you're hoping that somebody else puts in their control that stock or that company and they do well. You have no control over that. You have no leverage and you don't get all the benefits. You just get the appreciation. So I think my argument is I want to own real estate too, alongside stocks. But I think both are great, and I think you need to evaluate for yourself what does your investment portfolio look like? What goal are you trying to achieve? And how will each of these help you get there? Because if you're just looking for cash flow, you might look at passive real estate investments, you might look at active real estate investments, you might look at dividend producing stocks. But if you're just chasing returns, maybe you're buying growth stocks where you don't get paid anything in that period of time. Or maybe you're buying undervalued real estate, maybe it doesn't cash flow so well, but you can add a tremendous amount of value to. You always have to know where you're trying to go, and you can use both of these tools to get there. Thanks for tuning in, guys. Always here to help. Jordan.moorhead@kw.com, and you can call or text me at any time, 512-888-9122. If you're tuning into our channel on YouTube, please be sure to like and subscribe. Have a great day. We'll talk to you soon.